Before we get started, let me share with you the zip file, which we often do. Let me get this chat. It's going to be in the chat. If you have any questions, put them in the chat, please. And okay. All symbols and trading ideas discussed by the instructors are for demonstrational purposes only and are not recommendations. Strategy trading and active trading is not suitable for everyone. Futures trading, options trading, and active trading is not suitable for everyone. Past historical performance does not guarantee future results and may not be indicative. Past historical performance is not guaranteed, may not be indicative of future performance. All educational content and custom easy language studies provided are examples for educational purposes only. Neither TradeStation Group or any of its affiliates suggest or recommend trading indicators, scan strategies, or any other investment or trading advice of any kind. You alone assume any trading risk associated with the analysis or trading examples provided. Okay. So it's great to be back with everyone. I'm David Russell, VP of Market Intelligence at TradeStation. And, we're entering into a kind of dead time of the year. I have been kind of trying to day trade ranges myself because this is now a quiet time. And, I almost feel like I should create some more workspaces or something. Some of my day trading things I have on a different computer, because I want to show you guys some things right now. Most of the things I focus on historically have been kind of, thematic focus with a lot of stuff. And that's how the masterclass workspaces I've created it now is designed to function. Now, if you don't know what that is, I'm not sure if we have new people on this one or not, but if you're new, let me know. If you have any questions, put them in the chat, please. But basically, when you open the zip file, there's a link I put in there. If you open the zip file, this is what you're going to see. You're going to see these easy language studies, this, and this. You're going to want to import those into your TradeStation. It will look something like this. I'm not going to do it because I already have them. And then you're going to open these workspaces, and that's what I'm working with right now. And I have also opened this spreadsheet, is a list of stocks corresponding to thematic ETFs. I've done that because I'm adding them to the price grid, because right now I'm looking at solars. I've been active in solars and I'm increasingly interested in this. So I basically went to the spreadsheet. Here's how you use it. If you're interested in, I don't know if you guys, I know these ETFs kind of like, people know baseball players or whatever. I used to be into baseball a long time ago, but Control F, TAN, that's the ETF. Just copy it. Now, some of these actually have gone away since I last did the list, but you basically paste it into these different, price grid, MA tools, and fundamentals. So you can hear my other computer talking. I've been coding something when TradeStation will tell me intraday signals. It will actually talk. And I'm trying to get it to the point when I feel I can give it to customers. I muted it though, so you won't hear it anymore. Anyway, so these workspaces, this workspace has 4 tabs. The first one is your kind of thematic Intel top-down kind of look. And then the other ones are your, looking more for actionable individual things. So what I'm doing here is I'm looking at the solar stocks. And one of the reasons I do that, let's start with the first one, key ETFs. Industry ETFs. If you look in the last month, for example, solar is the top. It's the best in the last 2 weeks as well, which is the 10D. So the way I generally look at this is I'm always looking at essentially lists like this of the ETFs based on different time frames. And then I'm using those to kind of assess where the relative strength in the market is. And one of the things I'm writing about today, if you look on Market Insights, if you go to tradestation.com and then you go to, if you go to tradestation.com and you go to this thing here where it says research, I think, and then you go to insight, that's how you get to it. So I wrote this thing about semiconductors, and you know, what's really interesting, and I did it on TradingView as well, but I had noticed, I was active in some of these semiconductor stocks. I talked about them a lot as they rallied off the lows. But what's interesting here is when we started getting around here, we got to the passage of that bill in Congress. And that to me was just and I think I mentioned this in the last class, but you always have to be careful of a sell the news event. And the fact is that people expected it. And after you get the news, you get to sell the news. And, buy the rumor, sell the news. When something is expected, you get very often, once it happens, you get the contrary move. Um, Now, the question is always, has the market priced it in? And in this case, with a rally of like 29% off the lows in semiconductors, you could say they had priced it in. Now, one of the problems here is really that on top of the fact they priced it in was we've had just an absolute flurry of bad news in the chip space. A few companies had kind of decent results, but Intel I know has been a dog for a long time. But I mean, Intel, Micron, Western Digital, Seagate. These guys are traditional PC related sort of business, and that is in many ways, whether we like it or not, it's a bread and butter of the chip space. The future of the chips might not be desktop PCs, but at the same time, it's going to be hard to see the industry flourish when that market is shrinking 10% a year, like Mr. Gelsinger, Pat Gelsinger at Intel said. So, right now we have an opportunity, I think something in the chips when they've really hit a wall. And I was writing about this yesterday. I think one of the other things that's really important, if you $ SOS stocks, look at this. This is what I wrote about in both of these articles. This jumped out to me just like a sore thumb. Lower high, and then look at early June. We made a lower high. Now let's look at the NASDAQ, NDX.X. It made a higher high. This is the relative strength you're looking for. And I think right now, when we look at this, to me, semiconductors are just, they could be dead money for a while. I think we need to be careful of this. I don't even want to talk about geopolitics, but the China-Taiwan thing is just, I mean, who knows what's going to happen with that? But the fact is, it's not a positive. It's going to create more, whatever. And I think right now we're just in a situation where, we've had a decent bounce in some of these things. And I think this is the kind of market that we're in for the next month or two, which is don't think anything's going to keep moving for a long time. You get these rallies, you got to ring the register. And that's what I've been trying to do. That's why I've been trying to trade ranges. I've been trying to build that discipline. It is not fun. It's not the way people want to do things, but you can succeed in it if you draw your levels and you just realize, the selling is so important when you have those profits to just be like, I'm done. And I look for the next thing. And I wanted to just point that out. So as we look at that, let's actually look at one of the other tools I have, which is ES charting, one of the masterclass workspaces here. This gave us a signal yesterday morning. And what's interesting is we had an outside candle. Now, look, I don't really care on this chart. I don't care if it's a bullish or bearish candle. All I care is if it's an outside candle, it can be a reversal pattern. When you have it at a multi-month high in the first 35 minutes of normal session on a Monday morning, that is bearish. And it was. But, now that we're down, like 70 or 80 points, the question now is not even that much. I mean, I think you have to realize it's not that much. This market is not moving very much. So when we want to talk about getting bearish, you got to be really careful about how bearish you want to get, because this is a market right now where the movement at the index level is slowing down. we are entering a market that is much less index correlated, and we're probably going to see simply less movement. And I think it's important to understand that. Now, one of the other articles we had here on Market Insights, I actually have a trading view chart. If I can, I'll just show you how to do it. I'm going to build this chart really quickly. Let's do chart analysis. All right, so look at this article with this guy kicking back here. Where's the VIX? This thing. This I think is significant. Let's do $VIX.X. Let's go to a weekly chart. Okay. Now I have this other thing. If you guys don't have this, I'll give this to you. Let's call it, I think I call it price streak. Maybe it's moving average. I am not good at keeping all of my studies lined up. Let's try MA streak. And then what we're going to do is we're going to change the moving average to 1 day. And what that will do is that will allow us to see. All right, so let's change this now to a histogram. If you guys do not have, is that the same as outside bar? Yes, it is a show me, is a question, and I'll get back to that in a second. All right, I'm going to change this to a histogram. All right. So what are we looking at? This counts how long a moving average is moving in a single direction. And we change it to the 1 candle, which is basically just going to tell us how long price is moving in a single direction. This is the weekly chart of the VIX. The VIX just declined for 7 straight weeks. And that's actually a really big deal. Movements like that in the VIX are not very common. Let's space this out more. Let's just change it to 25 years back. All right, let's see how far back we can go, hopefully without getting bad data. All right. So if you look at this, you can see that a move like this occurs rarely. One of these occurred in August of 2018. That's probably not a good signal on that one, but let's actually look back and see what the market did at that time. Because it did crash, but the question is how long after? It was basically this moment. So in this case, it was not a good signal because the market was about to crash. But if you look at more recently, and most times when you get this kind of steady decline in the VIX, in my experience, go back to VIX. Most of the time when you get these big declines like this, the market just sits. And so that to me is my thing that I think we're finding here. And I've done this with different webinars, but my experience, I approach the market in terms of looking for trading as it goes through essentially 3 modes or cycles. The market will have a correlated crash when there's blood and guts and everything's terrible and everything goes down, and like the big this sort of thing. And then you get the big correlated rebound. That's what we have here. That's what we have here. This is June. This is an hourly chart of the S&P cash, right? And this is the ES charting index. So when you have moves like this or like this, it behooves you to trade the indexes. But then when we get to points of stability, it behooves you to be looking for individual stocks or individual sectors and looking for those sort of opportunities. And I believe that is the way the market pretty much always functions. It's not to say that it always goes up or down because of X, Y, or Z, but the market goes through periods of correlated volatility, down and up, and then it goes up and then it stabilizes. And when you're in a bull market, it could stabilize for months or years. If you look at the S&P or here's a NASDAQ annual sort of, you can see that when you're in a period like this, the moves on the index are small and the opportunities are very often in individual stocks and sectors. So, it goes down faster, but then when it rebounds as a correlated index event. And that's what you want to see. But then that's when you want to focus on the indexes. But then when you actually start to see the VIX get down to a certain point, that is actually when you start to have the the opportunity for things to be more stock picking. Now the question is, look, I mean, I think you could draw a scenario here and say, you know what, this is the bottom of the VIX. You can see that it's making a higher low, and we're going to have just another just horrific sell off. And I am not saying that's not going to happen. My overall analysis at this point says that, from what I've said overall, is that there is excessive fear in the market and inflation is moderating. And that's kind of the scenario I'm working with. What was very interesting yesterday is, if you look at this survey done by the New York Fed, inflation expectations actually fell pretty sharply. Check this out. I'm going to share this link. This was a CNBC did an article on it as well. And it seems to me that the Fed has pretty much signaled where they stand right now. I mean, that maybe they do 75 in September, but they're kind of at this point, starting to lean toward the direction of, having maximized what they're doing. That seems to me now where the market is standing on it. Now, of course, tomorrow we have this major CPI report. And so I think the question now is there's a lot of negativity and fear into it. And that to me creates more the potential of, of a sort of a relief rally after the news. And I think that we need to kind of remember where we stand in terms of the calendar, and just realize that we're at a point now where there's still a lot of overall negativity. If you look at the American Association of Individual Investors, where is it? AAII. I look at this sentiment survey a lot from AAII, and this is still a pretty bearish outlook that they have. Most of these sort of surveys still remain pretty bearish. And when you look at it, we have basically, a healthy economy and some signs of inflation coming under control. We actually wrote about this. If you go to my other article here, if you look at this one, I'd really encourage you guys to, if you Google this, if we actually look at, ISM, the ISM Manufacturing Index. And if you actually read this, they make these available for a limited time. But if you Google price is increasing at a slower rate. Price index was a very sharp decline. The index's lowest reading. So basically what is very interesting to me is, if you look back to about September of last year, ISM, this report from the Institute for Supply Management was saying massive prices increasing, that this was in their report, massive shortages. And now we're seeing just the opposite. So, I see this, and I see this other thing from the, from the New York Fed, this article. And, to me, this is telling us that, a lot of this now, the pendulum could be swinging back. You don't want to be like too cocky that it's all over and done with, but you also have to just be careful of, fighting the last war. And, the thing is if we're at a point where, inflation is peaking, energy down, when you look at how much the energy sector in the oil price has pulled back, there's going to be a point here where, oil, like gasoline, hit a new relative low recently. I saw some article about gasoline hitting some new lows. So anyway, I saw it somewhere. Maybe it was on oilprice.com. Here we go. So you see things like this, and you put all those things together, and I think we just have to be careful of being too bearish right now. I think we remain in a place where people are overly concentrated, to the downside. No one wants to believe that this thing is getting better yet, and I think that there's reason to be not as bearish, especially when you look at that decline in the VIX. So from my perspective now, I'm kind of thinking things that lean more in the direction of, the VIX actually is at a point where it's telling us that we're at a point of stability. We are at a dead time in the market. Let's look at the S&P here in the daily chart. We are at a dead point of the market through the next 2 to 3 weeks. And, what's going to be interesting now is I would not be surprised to see us in this range for the next week or two. So that's why I'm saying start getting ready for ranges and just focusing on that. And, it's annoying. I agree. I mean, honestly, like I have these winning positions and they just turn bad. It's so annoying trying to trade ranges. I don't like it. It's a real pain to trade ranges, but I think it's what the market is giving us right now. Now let's get back to solar energy, because if there's anything that's trending right now, I think solar is one of those that is interesting to look at. The one in particular that I'm looking at right now is SolarEdge. This company had a bad earnings report, but the sector is good. It's one of the main names in there, and it has this golden cross. So this is interesting to see this pulling back and holding this level. Another one that came up on my scans recently was, I'll just continue with solar. There is one stock that I actually have myself. It's this Chinese stock DQ, but I mean, it has a history of making some explosive moves. A stock like JKS as well. We don't want to forget about maybe these Chinese names if we see the solar, thing kind of happening. And then also I will point out, your other names like Enphase, which has been the leader. We did this one TradingView when it was down here at the 200-day moving average. And, now I'm not sure exactly, what to do with it. But when you look at solar here, I think it's interesting that, this sector, I think is emerging. And, you have that thing having passed in Congress, which is a positive for it. But, I think that this is a secular trend here. This is something where we are going to see more investment in solar in various ways. And, I think that we're in early innings of something here that could really be a secular growth story for years into the future. So I think we need to kind of start learning about, this part of the market right now. Another company that fits into that a lot of people might not know about. It's not a solar stock. It's like an electric car, kind of. It's a battery stock, kind of. Originally, this company, SQM, it's a Chilean fertilizer company. It's a mining company. Sociedad Química y Minera. They would do fertilizer, but now they're involved in lithium production, and it's had some very interesting price action and some interesting sort of news. And to me, this is something of an explosive chart. When you consider how bad most Latin American stocks have been, and when you even consider how bad most materials have been recently, look at the XLB, look at even the fertilizer stocks like Mosaic and CF. I mean, CF's kind of rebounding, but a lot of these material stocks have been pretty weak. SQM really stands out. So to me, this is a very interesting sort of pattern we're seeing on this name. It came down, held the 50-day. Depending on how you look at it, you can see this level that it held from March. It held here. I mean, this is a name I think that fits into that bucket that people are going to be looking at. I'm just looking at some other things here. I would also mention that NVIDIA, we wrote this thing about it, but so today I read on CNBC that Cathie Wood bought a bunch of NVIDIA. I would just say that to me, that's a really good reason to be short NVIDIA. Or I can't say that, but I mean, she's not a good indicator. I mean, she's really good at buying stuff before it goes lower. So I think that to me, this whole kind of thesis of like, AI, cloud, it sounds wonderful. I'm not saying that it's dead forever, but it's just not where things are now. It is simply a crowded trade. And I think there's a lot of people who they were excited when we got the bounce in some of these growth stocks. But here's the thing. After you get a sell-off in a sector, a real, and I define this as an epic sort of sell-off, and what I mean is the market goes through, I call them really epics, roughly 5-year regimes. And the growth epic really started at the end of 2016. I remember because the small caps had this explosive rally after Trump got elected, and everybody thought, oh, it's going to be great for like American steel stocks and terrible for like Amazon. And it was the opposite. And we basically had the rise of FANG stocks in 2017. And, this whole thing lasted until, the second half of last year. But the thing is, once it stops, it stops. It was like housing stocks. They had this, and it ended in 2005 to 6, about 2 years before the mortgage crisis. Everything else, energy stocks blew up in 2000. They died in 2014, and they were dead money all the way through until recently. So the thing is that the market, I believe, works. Institutional investors, they work in these long-term sort of multi-year, regimes or epics of what works in the market. And in my opinion, like I said, this growth thing is it's played out. It's not to say that, we're not going to see more growth in cloud computing. The point is that the market has priced it in, and now it's just old news. So that I think we are at a turning point, and a new market is emerging before us. And I'm not sure what we can say about the new market, but I do think we can say that so far, the first thing that really seems to be playing out is solar. And we could be at the beginning of a 3 to 5 year process in solar, like we saw with semiconductors starting 5 years ago. And there could be opportunities left and right for the next several years in this industry. And people will look back in 5 years and say, you just be like, how on earth did I miss that? So I think that that's one thing I really want to just note right now. As I look at a lot of these other things now, I'm just looking for any other points that I wanted to make. I just kept some bullet points I wanted to mention. Another one I want to just mention, Ford Motor here. Interesting rally. We had an article here on Market Insights about Ford. There was somebody rolling. It was interesting in this name. What they were doing was they basically were rolling a covered call. Uh-oh. What's happening? I hope I haven't lost my internet. Are you guys still there? Can someone respond to me? This is crazy. All right, there we go. Ford Motor. So basically in this one, they were short the 16 calls, and they rolled it up to the 17s of the first Friday of September. All right, I don't know what's going on with this thing. It's not working very well. But if you look, they basically went from the 16 to the 17 calls in Ford. I have a chart if it loads. They were short the calls here. They bought them back, and they moved up to the 17s to give it more room to run. I mean, I look at something like this personally, and one of the things I've really been trying to do is, you really want to try to not chase things like this, obviously. But I also think it's important to realize that this is a pretty significant move that I think we saw in Ford here. And the news was really good. And they're in a very favorable supply demand environment. I'm having trouble with my internet. I don't know what's going on. Can you repost the zip? Yeah. All right, guys, if I lose you, it's nothing personal. It's my internet. Here you go. Anyway, I'm there's something wrong with my VPN or something. So the numbers out of Ford. I mean, this is the one again. All right, another thing. Looking back, 3 years from now, Ford Motor, you know, a company like this, let's look over at our masterclass fundamentals. Gonna add this Ford Motor. All right, it trades for 3 times earnings. That can't be right. However, you're looking at a company that trades at a really low multiple. And if they increase their mix of electric cars, that price to earnings ratio, let's just look at price to sales. I mean, that's honestly, I find prices more relevant. All right, Tesla trades for 13 times revenue. Ford, if they increase their mix of electric cars, maybe they go to 2 times revenue. And the stock in that case, and I think right now, looking back in the future, if you really, and you don't want to predict the future, but you also have to kind of just think, Ford Motor, one of those great sort of American automakers, one of these companies that is likely a survivor. Let's set a price alert around 13 and 14. See this level? I think that's the sort of way we want to be thinking, because a stock like this is just the turn is real. The inventory problem of cars is real. The massive, insanely strong job market is real, and all of those things mean that people will be buying cars. And so I do want to just mention that here. Let's be thinking about a name like this. And so it's going to be on my list, and it popped up for me. All right, so let's just go back and look at this again, starting from the beginning. If we look in the last month, what we can really see here is we're starting to see some outperformance in the Russell small caps, which is, to me, pretty interesting. If you look, it's actually been outperforming the small caps and the metals. And what I'm seeing here is, I think now we're seeing a little bit of a turn back to some of the cyclical sort of areas. We had a really nice rebound in some of the growth stocks. The names that are the ones that very likely will lag for a while now. And I think that we need to be kind of thinking out a little bit further into the future and realizing that, the large cap growth stocks, a lot of these companies are not necessarily, going to be where the real strength is into the future, possibly. And I think that if we're working with the idea that we're kind of entering a new period of the market, we want to be looking for new sort of opportunities, that actually favors things like the small caps. So I think it's interesting. We're starting to see a strength in things like small caps. We're starting to see a little bit of a turn back toward the sort of cyclicals. And I think that's just kind of interesting. The consumer discretionaries, that sort part of the market is the place where things are going to want to be. Ford Motor is a consumer discretionary. I continue to look at the home builders, and I mean, to me, the home builders also, they face a scenario that is very similar to the autos, where there is simply a structural shortage of homes. And we know this, I've talked about it a lot, but I think it's another area they traded extremely low multiples. And that's another area where I continue to be kind of looking for opportunities. Let me just think some of the other things here that are really standing out. As we look down our list, I just think it's interesting that we could see things like small caps and industrials doing pretty well. I'm trying to see if anything does stand out here. It's interesting to see the retail ETF, doing pretty well. All right, let's look at our market breadth for masterclass, because it's interesting to look at this. And what this allows us to do is this allows us to look at the breadth of the different indexes. And this, for example, is the Russell, the small cap index. And what this does is each one is going to have here an advanced decline line. And, most of these now, the signals have not been particularly meaningful. I'm just looking to see if there's anything on it that really says much. To me, it's all these kind of point toward the direction of a kind of neutrality, where if you if you really believe that that there's a lot, if you believe things are kind of stabilizing now, then it's sideways drift with the potential for continuation higher. But if you want to also be bearish, you could see it sit here and then expect the longer term, weakness to continue. And that's why I think right now we're going to be kind of sitting at a point where, there's, going into this part of summer, not a lot of movement. In my underlying instincts, I tend to think that there's going to be continuation higher. But at the same time, to me, that is something that is a possibility that I will act on if it happens, but I'm not going to go out there and stick my neck out for it either. Especially the CPI report tomorrow, we could basically see a dive down to 2,000 on the S&P, 4,000 on the S&P, to this high from July 22nd. I've been watching for a retest of that level. To me, that is completely and totally a possibility. And, we want to be, wary of that happening. That's a problem when you're in ranges. Ranges have a tendency to narrow and then widen, and then the move comes. And I think the problem here is we can often get this sort of counter trend move. It'll knife down, and then everyone and their brother comes off the sideline buying, and then that's when the rally takes hold. So to me, that's kind of the sort of agnostic position I'm in right now. I'm able to kind of, jump around to anything here because we're in this really tight range right here. We've been in tight ranges like this before. And, my instinct tells me though, that it's going to resolve higher, but that is an unverified, unconfirmed view. And my reason for saying it is because nobody else thinks it's going to happen. That's why I tend to think it's going to happen. NQ. All right. So if you look now at, like, again, I mean, so this is the NASDAQ, the QQQ, and, the internals of it, all these things are pretty much, pointing, they're just confirming that the bounce we've had. To me, none of this really, we haven't had a lot of new highs or anything in the index. There's nothing really in the internals that tell me a whole lot of anything at this point in time, on any of these breadth studies. So as I look at them, I wanted to just kind of review them today. I continue to really see not much of anything on the breadth. In terms of NQ, if you're just talking about the NASDAQ overall, I mean, from my perspective here, like I said, I think that we're facing more of a sort of, neutral thing here. And, I would tend to think at this point that this is actually likely to struggle to a certain extent. I think that like I said, from my perspective, we're more likely to be in a position where the market is bottomed for the year, and we're going to have just a lot of sideways movement. When you have something like the Qs that took this big beat down, you get this really sharp rebound, but then after that, it's not to say it's going to go down a lot more. It basically says that it's going to be just torturous for the next months and probably quarters. This is now going to just be a chop fest, and a lot of very short-term trading based on hourly levels, that you have to just be prepared for. I think the days of buying tech stocks and holding them and letting them double, that has passed. And now it's going to be looking for those opportunities in other areas. And what I've been rotating toward more recently has actually, I've been looking at energy stocks now. So I want to take a look here at, some of the energy stocks, like something like ExxonMobil or something. What's interesting is it's had this big chopping here in this range, but when you really look at crude oil here, from my perspective, this is pretty interesting to see it come down and hold this level. And, holding a level like this above these levels from earlier in the year for longer term trend following, this this to me is the thing that right now would have the most potential. And that would mean something like, there's various energy stocks and we have those. And I also think though that like solar is going to be part of that, especially now that we have this law that passed in Congress. If you look back to 2006, 2007, solar energy followed crude oil and traditional energy stocks. That correlation broke down a lot in the last few years, but there's every reason there's no reason to think that that was a bad correlation, and we could see solar and traditional energy move together. That's kind of actually the position that I'm leaning on here. Warren Buffett added to his position in Occidental, and there's another chart that I keep here. I have all these things bookmarked. I have the energy department. This is worth looking at. Crude oil inventories. All right, I don't know why. This is the link if you want to look at it. Another thing that was bullish recently that I think we want to also be aware of, it's very esoteric, but the biotechnology, the IBB and the XBI, those have been quite strong, and they've had some decent news as well. So I think that this is an area they've had a really nice bounce, and from my perspective here, I've actually been participating in this, but from my view here, I'm looking for, I'm not adding yet, but I'm looking for some kind of pullback here, maybe something around 86.5 or something. But I think we want to keep a lot of these biotechs on the list as well. One of those, Vertex, VRTX, broke out to new highs today. Moderna has had some good price action, mRNA. So I want to just say we have, the biotech thing. I didn't want to talk about it too much because it, near term, these are pulling back. But I think we also have to realize that there's been some interesting news. There has been M&A in the space, and there has been data. And the other thing is that they don't really seem to be the same whipping post they were for the politicians. I think going into this election, I don't know a ton about I'm not a political scientist, but I don't think drug prices and all that stuff are really it's not really where the emotion is right now. And besides, a lot of that stuff I think is it's in that build, whatever that thing that the Democrats are pushing through now, that has some medical stuff in it. But I think that right now, biotechs have been under the radar, and they have some interesting news happening, and they've been really thrashed when you consider how significantly they've pulled back. And Pfizer has, a bucket of cash that they're putting to work. Some of these companies, it's happening. So I think right now biotechs are an area. Look for people to lose interest in AI and cloud computing and data centers and chips, and look to biotech. I mean, that to me would be a rotation that would make sense. And we're starting to see some of that. We're actually seeing it in the price action. All right. Well, those are most of the things I had. Let me know if you guys have any questions. Let me look at the other charts here we have. Well, look, just with ES here, what I would say is that was your bearish signal, but look, we're getting these outside. All right, so you asked the crosses. What I did was these are outside candles, and what I did was I changed it to a white cross to highlight it. The way this chart is intended to be used is that when you get 2 of the 3 indicators in your favor, it's a signal. So in this case, the market here is stochastics are oversold. So you have stochastics, which is this thing. You have MACD, which is this thing, and then this histogram is the direction of the 50-hour moving average. And when you have 2 of the 3 working in your favor, it's bullish. So right now, we basically have MACD falling, right? And if you look at it right here, you had the stochastic near overbought, but the 50-hour was falling. So this was a bearish signal this morning at around 3 or 4 a.m. So that was a while ago, obviously. but that was an example of the bearish signal. It's continuing to give bearish signals, but if you look at it now, it's not as clear. Believe it or not, even though we've been under the 50-hour, the 50-hour is starting to turn positive to flattish, and that's because it is including some of this price action. What's also interesting is we're now in an oversold condition. We're also getting little white crosses, which tell us that we're getting outside price action here. We're getting a failure of the bears to push it lower. And this is exactly what I was anticipating when I highlighted this guy with the VIX, this VIX article, this thing. When I said the VIX went down like this is what I meant. The ability of the market to crash at this point in time structurally, unless something really changes, this decline in the VIX tells me that the ability of a real blood meltdown, a real crash and all that, it has now really faded. And we're taking a step back and we're saying, wow, prices actually have come down. We're creating massive jobs in this economy. And, maybe it's not going to be so terrible after all. And we're realizing I have too much cash on the sidelines. And oh my God, the market is still down like 15% or something from its high. If I'm a long-term money manager, do I really want to be on the sidelines now? And I think these guys are starting to realize that, it might not be awesome, but it's also not terrible anymore either. And I think that the real thing now is that the fear, people are getting afraid of being afraid. And that's what this VIX is telling you. The fear is getting crowded. And so that's why, as you look at the market here, when you get these sort of signals like failure of the bears, non-confirmation, high or low, you just have got to be careful of not being long or of being short. You just got to realize that it's like this downward pressure that is pressing against something that is stronger than the downward pressure, and I think that's what we're seeing here. This inability of the market to continue lower. And this is why I'm kind of saying, like, from my perspective, I'm a little bit more leaning toward the direction of things are not that terrible. All right. Let's look at the other things here. So this is the hourly. And like I said, this now is giving us oversold. 50-hour is pretty much flat. MACD is falling, but there's a point when MACD has fallen a lot, and this has been kind of fading down here. So I think that this is kind of now not as meaningful. MACD is a trailing indicator, so at this point for me, I wouldn't even really give it a whole lot of credence. What really matters here to me also is the fact that we're holding this low from the 5th. All these here are just kind of showing we have this sort of consolidation pattern at this level, sitting and holding, and this could be turning into a tight basing pattern that's a high. And I've seen at different times in a bull market, if you actually look, this kind of hourly pattern happens with the ES. It makes a high basing pattern for a week or two, and then it continues higher. And I think we have to just be careful that very well could be what we get. All right, let's look now at market breadth. I did that. Pre-calculated indexes. I don't really. This is excuse me. This is meant to be used in tandem with these pre-calculated indexes. Basically, it's you guys can explore it. There's really nothing in it right now that I want to be looking at, but it's designed to be able to compare two things. So, for example, we can say something like, okay, how many S&P companies are above the 50-day moving average? We can see, okay, 362 of them. All right, well then, which ones are they? And then we can basically go over here and kind of look at those companies that are above or below the moving average, and you can actually compare stocks here with this chart, with the blue link, with the index here with the green link. It's not something I do it that much, but it does allow you to compare things on multiple levels. Sector analysis. Again, I think this is one that's interesting. I haven't really looked at this much now, but let's actually take a look at something like TAN. What this does is this compares, this is pretty interesting actually. All right, so TAN, this is going to compare TAN to SPY. And if you look at this, it's going to show the index as a ratio to the broader, S&P 500. And what is interesting is to see this sort of, this peak here, and the fact that we have been, working higher. And to me, this is actually a pretty interesting thing that might suggest that this sort of ascent is continuing. Let's look at how it compares something like XLK. This is now kind of continuing. And, if you actually look at something like XLK here, I would almost say that TAN is kind of like, right now, TAN is kind of where XLK was, like kind of back here. So, the idea is just to look at something relative to the overall market. And let's look at something else like the metals. Metals are also potentially kind of interesting here. If we get to a point of the Fed having, maxed out what it's doing, the metals also, the material stocks could benefit from that. I haven't really looked at this a huge amount recently, but what this allows you to do on a weekly chart long term is to compare how sectors are performing against the overall market. I also want to see what SMH is doing, because, if you look at, to me, this actually is telling me that semiconductors here are kind of, flagging a bit. They've priced in, as the market does, they've priced in a lot of growth. And now as the growth happens, it's yesterday's news. So I wanted to just kind of show that. All right, now, really quickly, I'm going to show you one other thing that I'm actually looking at, and I'm trying to figure out if it is the case. I'm opening a new chart. I'm going to chart two symbols. The Russell, which is at RTY, and let's do a weekly. Now let's go to data, add symbol, at NQ. Now we have two data. If you look at this, go to data, you go to edit symbol, you'll see it has data 1 and data 2. All right. Once we have that, we can go to studies, and we go to add study. We'll go to spread ratio. Let's go to data, edit symbol, and let's change this to 25 years. Let's inflate this, can make this bigger, easier to see. Okay. You can actually do fun stuff like, let's actually try this. Let's see if we can make this work. We can change scaling to hidden, which is cool. And I think let's try that for this too. I've never done this. I'm just always interested in making things. Let's go to scaling, hidden. All right, there we go. Good. This is the ratio between the Russell and the NASDAQ. Going back. And as you can see here, it also seems, it's real nadir or trough was the summer of 2020, when everyone was buying Cathie Wood stocks. But it does actually seem to me here that, this is something of a potential regime change, is what I'm saying. This was the FANG era, large cap tech stocks annihilating the Russell. But now the Russell is making a higher low. Interesting, and something that I think that we want to kind of be aware of. So this is kind of one of the things I'm kind of looking toward next. And it's one of the reasons why I think we need to be careful. This bounce that we've had in the NASDAQ and chip stocks and stuff, this might have been that final sort of bounce. And like I said, it doesn't necessarily mean that things are going to be bearish, but it could also just now be a period of a long sort of just troughing and chopping and sideways movement. And I would be more prepared for that. I think that's kind of more where we want to be thinking. And it's going to be time to be looking for new stocks and new opportunities. And we will continue to be looking for those. The last thing I would just say to do is, if you go back to masterclass and you go to price grid, let's delete all. So this is the solars. Let's keep an eye on some of those and start looking for some of them. But the other thing I want to do now is go to bring in the S&P 500. It's very interesting to realize there's so few companies making 52-week highs. We can see that from our breadth. If you look down here, only very few companies, only 8 companies making 52-week highs. But it'd be interesting to know what they are. So we can go to our days since 52-week high. And we can see ADP, Enphase, which is a solar, Granger, which is actually one I've been watching recently. You know, some of these companies are, you know, when you have still shortages of products, these guys have pricing power. This is an industrial supplier. It's not an actively traded company, but a company like McKesson as well. You could watch CNBC for the rest of your life and you'll never hear the ticker MCK. But it's an interesting company that has been really kind of doing something with their business model and their profitability, and it's just trekking to new highs. So these are some of the things I think that we want to be kind of, you know, looking for those companies that are hitting new highs, breaking out. And, you know, McKesson is one that I actually traded a little bit here myself, but, you know, it was hitting new highs, pulled back to the 100-day. So let's look for stocks that made a new high a month ago and have now pulled back in the last whatever. So you can look for those stocks that have made, all right, let's say all these stocks here have made highs in the last month. I'm going to say, if you haven't, I'm going to erase you. And then I'm going to say, look at these companies now that are down the most in the last, say, 2 weeks. And Lilly, this is how I came up with Lilly that I mentioned earlier, made a new high and it's pulled back a lot in the last 2 weeks. Interesting sort of pattern. All right. So those are some of the things I'm looking at here. And like I said, just at this point in time, you know, the risk here is that the bearish case just does not come together. And we're simply in a spot when there's too much cash on the sidelines and everybody hates it and CNBC can't explain it and everyone says it's terrible and the market goes up. And I think that's just, we need to be prepared for that risk. It's an unexplained sort of thing that just kind of happens. And that's where I am right now. So hope everyone has a great day. I will be back with you guys in a week or two. Don't forget to read Market Insights. If you have any questions, email me at drussell@tradestation.com. Hope to see you guys soon and have a great day. Bye-bye.